All right, and since it is noon, we'll get the ball rolling here. Thanks for joining us today. My name's Jasper. I'm with Score Main, and welcome to our webinar on keeping your business and personal expenses separate. A invaluable topic that I'm sure many people have questions on. We're joined today by Jessica, who is an expert on the topic. If you're not familiar with Score, we are a nationwide nonprofit for business mentoring, and if you don't already have a mentor, you can find one at score.org. We also put on many other workshops like this, so keep your eyes out for that. And Jessica, why don't you tell us a little bit about yourself and get the presentation going here?
All right, awesome. I'm going to do a little introduction in the presentation as well, but I'll introduce myself now as well. My name is Jessica Valentini. I'm a small business bookkeeper. I started my own business almost 3 years ago now and coach clients on how to start their businesses in a way that is easy right off the bat. I live in Scarborough, Maine, and yeah, I love what I do. So. All right, we'll go ahead and we good to get started?
Absolutely.
Awesome. So I'll go ahead and share my screen. And I think we're set as far as. All right, let's go here. Okay. Awesome. Can everyone see?
Looks great.
All right, perfect. All right, so today our topic is on keeping business and personal expenses separate, why and how. So I am going to give a background on, we'll go over another quick introduction. I'm going to give a background on why it's so important. We're going to go on what business expenses are, how to categorize some of them appropriately, what you might count as a business expense, and what you may count as a personal expense. How to actually do this, what are some best practices? We're going to go through a short exercise to just kind of practice, go through common mistakes that I often see with clients, and then we'll go through a conclusion as well and allow you guys to ask any questions that pop up through the presentation today. So my name is Jessie. It does say, I think, Jessica on my screen, but I go by Jessie. I'm a small business bookkeeper. I focus with service-based businesses and industries. The cute black lab there is my 7-year-old black lab. Her name is Nalani, and she's my hiking buddy, as you can see. I love helping business owners stay organized and understand their financials. When we have a clear picture of your financial state, you can make better business decisions and actually grow your business based off of numbers and not on emotions. One of the things that often comes up, especially with business owners, is we really get excited about new ideas and things that excite us. And it's super important that we do look back at our numbers, know where we stand, what makes us money, what doesn't, so we can continue to move forward, do what we love, and grow. So why keep records? This was from the IRS website that I thought was great. So why do we keep records? Why do we need to have our books clean? Why keep them in the first place? So good records will help you monitor the progress of your business, prepare your financial statements, identify sources of income, keep track of deductible expenses, keep track of your basis in property, prepare your tax returns, and support items reported in your tax returns. So 2 key things that we're going to touch base on today off of this statement that I thought was awesome was keeping track of your deductible expenses and then the support items reported on your tax return. It's super important to make sure that you are actually supporting your transactions because if not, if you get audited, the IRS will say, what is this? We're not sure, so we're just going to not count it as a business expense. Okay, so the first things first, why actually keep separate, why separate both your personal and business expenses? So the first one is legal protection. If you haven't yet, you should have an LLC or an S Corp or a C Corp. Which one of those things that you would like to do, I would talk to your business professional, tax accountant, etc. It is really important that you keep your business and personal expenses separate because it will preserve your corporate veil. If you mix funds, you actually risk losing your personal liability protection, making your personal assets vulnerable. That means that if you, for some reason, do not have that, I like to call it like a bubble. If you don't have that corporate bubble around your business, it can actually dip into your personal. So if something happens in your business, legally, they could go after some of your personal assets. So in order to make sure that you stay protected, you want to keep your business and personal expenses very separate from one another. The next one is making sure that you have simplified bookkeeping and tax prep. So when business and personal transactions are combined, sorting them out for tax purposes becomes a pain in the butt. And I can tell you this from personal experience. I've had clients that put all of their personal, all of their business in their books and say, oh, well, sometimes I have personal expenses that go on my business card and business expenses that go on my personal card. So I just threw it all on there. Well, that is going to cost you a lot of time and a lot of money down the line, and often it will miss deductions. So it'll miss transactions because we don't remember what they were for, and they end up not being transactions that we can count as business expenses because we either don't know what they were for or they were just too mixed in with those personal things. So we have to err on the side of caution. So keeping them separate saves time, reduces the headache when filing taxes and preparing financial reports. Like I had said in the beginning, preparing financial reports is really important so that you can make accurate business decisions. And when we mix the two, it's really hard to have the correct information to make those business decisions. The next one, I kind of dipped into this one already, is maximizing deductions. So when your business expenses are clearly documented, it's easier to ensure you can claim all eligible deductions. When I say clearly documented, I mean you have some sort of receipt, you have an invoice, you have some sort of transaction that is not your bank statement. Your bank statement does a good job identifying what goes in and out of your bank accounts. It does not do a good job telling you why. So it's really important that you have a receipt that is itemized that tells you what you bought. And then oftentimes what I actually do is I'll take a picture of that receipt, or first, please forgive me, first I'll actually write down why I made that purchase. For example, if let's see, so if I was going to get paper for my printer, I would have a receipt from Staples. On my bank statement, it would just say Staples. Be like, okay, well, I could have bought anything at Staples. I could have bought, what are they? Sometimes they have coffee at Staples, which is really interesting. Could have bought coffee, not for my business, but just for home, or toilet paper or something like that. If I was buying printer paper, and it was specifically for business uses, it would be it would be office supplies. And so at the bottom of that receipt, I would write printer paper for my printer in my office supplies at the bottom. And then I would take a picture of it and upload it into, I use QuickBooks, I would upload it into QuickBooks, and then it would create an expense report for me and then match it to the bank statement. So there are ways to keep very specific instead of, because I've had this before too, you buy something, you don't really remember why you bought it, but that receipt goes directly from your pocket, your purse, your book bag into a box. And that shoe box loads all of your receipts and then ends up in the corner. And you have no idea. And then you have to go through and you have to read them, but receipts aren't very good at keeping their color often. So then you're trying to figure out, 6 months from now, what the heck you bought, why you bought it, what it was for. So really important to make sure that you keep all of those source documents and keep them clear and tidy. And I recommend just uploading them, taking a picture, and utilizing technology where you can. One of the things with maximizing deductions is, as a bookkeeper, as accountants, we have a set of principles that we have to abide by. One of those is called the conservatism assumption. That means that when we are uncertain and need to determine how to report an item, we have to err on the conservative side. So that means choosing the option that will show less income, net income, asset benefit, etc. Potential losses we can record, while potential gains we cannot. So we have to err on the side of caution. So it's great to know what you bought, what you used it for, how it's a business expense. The next one we'll go over is clear cash flow management. So for clear cash flow management, you want to understand where your money is actually coming from and where it's going. This will help you manage your business and manage cash flow. There are certain things in your business that are important and that you need to buy. Some of those things might be marketing expenses. Some of those things may be your business supplies. You want to make sure that what you're spending your money on, you're not overspending and you're getting a return on it to some degree. When you are spending money frantically, you don't really know where it's going, your personal and business expenses kind of start to mix. It can hinder your cash flow, but your profit and loss statement may show a positive. You may be like, wow, I made money this month, but for some reason there's not money in my bank account. Why is that? There could be several different reasons for this, but one of those could be that mix of personal and business. So cash in a business is what oxygen is to us. When you run out of oxygen, you die. And that's very potentially drastic. And the same thing goes with cash in a business. If you run out of cash in a business, you die. And as small businesses, cash is king. And so it's really important to understand your cash flow and to be able to manage it appropriately. And that starts with our expenses. Where is it going? What are we spending money on? Is it a business expense? The last thing is why to keep personal and business expenses separate is an audit defense. So if your records are clean and they clearly show expenses, you are going to be in a stronger position if you do ever face an audit. That means having clear documentation of receipts, which we had just talked about, invoices and source documents. Your book should tell the story of your business. The story of your business is going to allow you, again, to make accurate decisions and know like where you are, where you're going, if you're winning or not. Okay, next, let's go through what a business expense actually is. So what is it? What is a business expense? A business expense is a cost that a business incurs to operate. So what do we need in order to actually operate our businesses? That business expense must be ordinary and necessary. So these words are kind of interesting and seem arbitrary, but it's a way that the IRS uses to say, is that a business expense for you or not? So an ordinary expense is one that is common and accepted in your field of business. And I'm going to give an example of this in a moment. And a necessary expense is one that is helpful and appropriate for your business. So an example of this is if I am running a bookkeeping business and I buy a fitness program, would that be a business expense for my business? Probably not, because I don't need a fitness program to run my business. I don't serve clients in that field. That would be a personal expense. So if though I am a gym owner, I'm a studio owner, I'm a gym owner, and I purchase a fitness program to use in my gym with my clients, that would be considered a business expense because it's something that is necessary and ordinary in my field of business to make sure that I can serve my clients appropriately. Okay, so those two things are really important because you have to think to yourself, is this necessary? Is this common? Is this ordinary in my field of business? If the answer to that is no, it's probably not a business expense. The other thing that is something that the IRS kind of keeps track of as well for what is a business expense is whether or not it is excessive. So a good example of this would potentially be meals, either going out to eat or traveling. If your business is one that does not need travel all the time, let's say you go to a couple conferences here and there, and all of a sudden you're like, you have a brick and mortar location, you go to 2 conferences to learn more about your business, that wouldn't necessarily be excessive. If you were going for 52 weekends in a row, that might be considered excessive for business travel. And so you have to be careful when you get audited for some of those things. It has to be ordinary, necessary for your business, and not deemed excessive. The next one is, so let's go over some examples some extra examples of what business expenses are. So things like your utilities, your rent, legal and professional fees, employees' pay, so payroll costs, and the costs associated with payroll, advertising, bank fees, and auto expenses as well. Auto expenses would be something that would fall under that, like, is it ordinary and necessary for your business as well? All right. So next one is how to actually keep your business and personal expenses separate. So the first thing is, which may seem like common sense, but sometimes it's pretty difficult because there's a few steps to get there. So the first one is just open a separate business bank account. The few steps to get there is, in order to actually open a business bank account, you have to have an EIN number, which is associated with registering your business with your state. And so that is like, your EIN is like your social security number for your business. And so registering as an LLC, as an S Corp, C Corp, whatever that looks like for you, you'll get an EIN number. And that's actually how you open a business bank account in your business's name. So first things first, when you do that, you open your business bank account. You use that bank account for exclusively business-related transactions. That's it. That's the only thing you use it for. You do not double dip into your personal expenses. You can also get a business credit card if that is something that you want, for either building your business credit, for getting there's a lot of really great points and stuff that you can get as well if you're running your business expenses through a credit card. I would recommend, though, that it is a business credit card. So like we had talked about prior, your personal credit card with business expenses, you are now personally liable if it's a personal card. Even if it's a personal card that you just have, even if it's a personal card that just has business expenses on it, you are still personally reliable if something happens to your business. Okay, so getting a business credit card is something that I would recommend if you choose to do a credit card. The next one is pay yourself in an owner's draw. So oftentimes, or sometimes, we can kind of haphazardly pay ourselves. If there's a lot of expenses in a business, we are the last people that get paid, which, if that is your case, I recommend the book called Profit First. It is a wonderful book because if you're not paying yourself, you have a really expensive hobby, okay? So pay yourself in draws or pay yourself on payroll if you're an S Corp. So instead of using your business account for personal purchases. So sometimes we can get into a bind and we say, oh, well, I'll just put it on my business card. Okay, instead of doing that, pay yourself on a regular basis, set up a time to do that. So if you pay your employees biweekly, pay yourself biweekly. Make sure that you are getting a draw into your personal account so that you're not running out of money in your personal account, and then you have to turn to your business account. So making sure you pay yourself is super important. It is super easy. Please forgive me. Regular draws can help you keep track of how much as a business owner you are making, and it makes it easier not to borrow from your business, like I said before. So the next one is using financial tools for both personal and business use. So separating the two can become super simple when you use a bookkeeping software of some sort. Really great examples of good bookkeeping software that are taking the industry by storm. It's QuickBooks, Xero, and Wave, all of which have really great educational resources for you to learn how to use them that are totally free, which is really cool. So those are helpful. Also tracking your business expenses, business income in those as well. Then separately, you can use different apps for your personal expenses so that you can keep track of what you're making, what you're investing, what your personal expenses are, and getting those super separate. One of my favorite apps right now is actually YNAB, which is You Need a Budget. They have a book, some really great resources there as well. The next one is avoid cash transactions if possible. So try to avoid any cash payments. I know there are some people that do shows, like artists will do a lot of like shows, or like if you have a restaurant and you have a register, that kind of stuff. is really important that you do take out cash and you have cash in your cash box. And try not to take cash from the cash box to go and pay a expense somewhere else. Sometimes it's like, oh man, I have to, so-and-so comes in and it's an outstanding invoice that I have. Let me just pay it and I'll give them cash. Well, then we totally forget. Maybe they forget to send you a receipt. They forget to say clicked invoice paid. And sometimes that can get confusing. So to make sure that you do have an automatic source of transaction that's going to show up on your bank statement, use a debit or credit card if you can. Yeah, to make sure everything is recorded. And then the last one, I will harp on this all day long. You want to tell the story of your business. So always get source documentation. So keeping digital and or physical copies of receipts, note the purpose of each transaction, why you did that transaction, what it was used for. This can be particularly helpful if you're going out to, you're taking a client out to eat. Maybe you're going to get coffee with a client and you want to write down what that coffee date was for. Hey, this was a networking event to talk about business, blah, 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 whatever it was for. This makes it super easy to categorize later and support any deductions that you have. So if you do get audited, you have, see, this is what it was for. I have source documents. It was a business expense. Okay. So I will harp on that all day long. Get your source documents. All right. What we're going to do is I have a little game for us to play. And I think there should be a chat box. So what we're going to do is it a business expense or is it a personal expense? So in the chat, comment 1 for business expense and 2 for personal expense. If you get it wrong, don't worry. And they should be pretty simple. So for the first one, let's see. All right. Or you can say it out loud too. I'm fine with that. All right. All right. For the first one, is it a business expense or is it a personal expense? The rent for your office. Let's go. Yeah.
Business.
First. Business. That is a business expense. Oops, I'm drawing on stuff. Woo! Great. Awesome. Business expense. Good job. Okay, awesome. This next one is coffee on the way to the office. Ew.
Tricky.
Right? Awesome. Yes, it is a personal expense. Good job, everybody. That one can be a little bit tricky because, right, I'm going to the office, I have to do work, I have to whatever. Sometimes we're like, oh, it's a business expense, it's fine. Like, no, that is a personal expense and we want to put it there. If you're going to pick up, if we're going back to Staples and we're going to pick up a container of K-cups for the office and you have a Keurig there, then that would be considered office supplies and would be or break room supplies, and that would be a business expense. So sometimes they can get a little bit sticky. It's like, okay, well, what are we actually using it for? Where are we using it? So good job with that one. All right, next one is your electricity bill. CMP sends you a bill. What is it?
Same percentage as your home office.
There you go. Yeah. Well, was it at home or is it at the business? Good question. So if it's your business, 100% of it would be your business expense. And if it's at your home, you're correct. It would be the same square footage of what your office would be or whatever that percentage is of usage. So you have to think about that. That's a really good question for your accountant to say, okay, and break down what percentage, because that gets a little tricky because we're like, okay, is it percentage of time that you're in your office and that you're using? So yeah. Nice. Awesome. Okay. So we're going to go over a couple common mistakes to avoid. So, okay. Common mistakes to avoid. The first one is using one card for everything. So we kind of touched base on this already with making sure you have a business and you have a personal card and keep it separate. So this would be if we were just to keep everything on one card, not get any business accounts. That leads to super messy records. It increases the chance of missing any sort of deductions. And you have to go through it with a fine-tooth comb, or your tax professional does. And that takes a lot of time and a lot of extra money. So that's number one. Number two, borrowing from business accounts. So avoid dipping into those business funds for personal reasons. Again, this can disrupt cash flow and cause a lot of confusion. The next one is neglecting any sort of record keeping. So I know that you are all in positions where you are doing what you love and building your business. That is super important, because when you're not building your business, you are the number one most important employee in your business. When you are not building, your business probably isn't creating, isn't flowing, isn't making money. That being said, this is like the cleaning your bathroom, right? You want to make sure that you do keep up on record keeping. If you don't, it ends up well, I'm going to go over two different things. If you neglect record keeping, you pile it on for the end of the year. Makes the end of year on top of holidays already stressful, and will cost you more in the long term, especially if your accountant ends up doing your bookkeeping. They charge a lot more for bookkeeping. The number two would be that for the entire year, you have no idea where you were. You just know that either the money in my bank account went up or the money in my bank account went down. Okay, so making sure that you keep up on record keeping, whether that's putting an hour a month into your schedule and saying, okay, this is the day that I'm going to sit down, I'm going to pay my bills, I'm going to go over my books and make sure everything's categorized in the right position, go through my records, go through my receipts and get it cleaned up just once a month, an hour or two, set a weekend day aside, something like that to maintain accuracy. The next one, or common mistake that I see, is using Venmo, PayPal, and Amazon. There are some others that make it a little bit confusing as well. The thing with these, the IRS one doesn't really like Venmo. I know they recently did they've now changed where if you are a business, you can get a business Venmo, which is pretty cool. And they'll 1099 you, which is also awesome. So, and one thing that is important to note is that when these show up on your bank statements, they just show up as Venmo, they just show up as PayPal, they just show up as Amazon. And so you have to be diligent about making sure you know what those purchases were for, both whether that was income, because through Venmo and PayPal we can get money, but also what we were spending out, and making sure that you know which transactions were personal, which ones were business. Amazon also allows you to get a business Amazon, which has some really great savings. So if you do need a lot of supplies for whatever your business is, Amazon Business is great. So I highly recommend that, and knowing to attach the receipts to whatever bookkeeping software that you use. And then the last one is ATM withdrawals. These ones can be difficult, like we had said before, because if you don't have source document, the only thing you have is your bank statement. This is just going to show that you took money out. And oftentimes, if we have no source document for that, that's going to have to go into an owner's draw. And if that wasn't used for an owner's draw, it was used for, paying a contractor or paying some sort of business expense, and you don't have source document for that, you're going to end up not being able to get your maximum deductions. So that one is super important as well. All right. So, thank you guys so much for attending. Does anyone have any questions? Did anything come up?
Nothing in the chat right now, but yeah, go ahead.
I do have a question.
Yeah, what's up?
Thanks for all that. Super
course.
helpful. I wanted to circle back to, this is kind of more specific on the business personal expenses. I do a lot of travel for my job with event production. So I'll go on location for these events and fly to a city. If you're traveling and you're, say, gone for 2 weeks, would you then consider like all meals during that time as a business expense with the 50% deduction? Or do you still have to, like, would that coffee, for instance, if you were out traveling and you were going to site and getting coffee, would that be considered a meal deduction?
Okay, so I'm going to give you an answer, and I'm also going to refer you to an accountant that will tell you a little bit more and probably better for your specifics. I would, so even though you're traveling for business, so your hotel would be covered for business, your plane ticket would be covered for business. They're really weird about meals these days. So if you're not doing business in that meal, it's, if I'm remembering correctly, it's technically a personal expense. So even though you're traveling and you're traveling for business and you're somewhere else, it is still, yeah. And there might be some different like nuances and rules that you can like kind of get through. But if you're not in a business setting, then it would be a personal expense.
Okay. All right. Yeah, I think if there is someone that I do have an accountant that I'll talk with to get a little more clarity. But like if you were getting an Airbnb was where you were staying for your thing and you went grocery shopping, for instance, to me, that would be considered getting meals for while you're on a business, but I can understand that it would also look personal.
Yes, and it's interesting. They've gotten a little bit stickier about meals specifically. As you know, they've changed from 100% deduction to 50% deduction. So they're, back and forth. So yeah,
for sure.
That's a really good question for your accountant, for sure.
We did have one in the chat from Jacqueline Carr, wondering what was the name of the book you recommended earlier again?
So there's two different ones. The personal, I can write them actually in the chat.
Yeah, that'd be great.
Yeah. So the personal one for personal finances, it's called You Need a Budget. And then the second one is Profit First. And what they recommend is for business. I will adjust that. What the Profit First is a really, really great one, and they have editions for different businesses. So they have one that's like grand scheme of things, but then they also have like I've read a couple for different types of businesses, and they'll lay out how to navigate allocating money to make sure that you are not that you are able to pay yourself first, since the profit first. But then it also gives you really great guidelines as to how to evaluate where your business is now, and then how to adjust and where you should be. So for example, the service-based industry, payroll is our biggest expense by far. And so oftentimes that is what we have to manage. And so it says, okay, if anything below X percentage is a good percentage to be in for payroll. And so it'll kind of give you those metrics as to where you should be in each category. So
yeah, great resources to have. I can also include the names of those in the message I'll be sending out to everyone after the end of the workshop.
Awesome.
And well, before we wrap up, anyone else have anything before we wrap up today?
I do have one more question, if you don't mind.
Yeah, go for it.
Back on the separate credit cards, if it's not associated to your business bank account, if you were to open up a credit card, let's say you're with Bank of America and you open up a credit card through Capital One, because of whatever rewards they give, but you're paying that statement with your business bank account, do you think that that would still open you up to the legal issue of commingling personal and business bank accounts?
Is the bank, is the credit card that you opened with Capital One a business or a personal?
I guess a personal.
So that's a really good question, because the liability, so to keep it as clean as possible, I would still say get a business credit card. That's
Right.
that's gonna be my number one answer.
Yeah.
If you're paying it with business expenses, so the biggest thing would be like if you were to hold a balance on that credit card, and if you held a balance on that credit card and for some God forbid reason you had to close your business, then you are personally liable for whatever's on that credit card. And so now there is no like negotiation of like, well, I'm out of business, and so I'm, declaring bankruptcy.
Right.
This is what that looks like. It is now your sole responsibility. The credit card companies don't care.
Okay.
They don't really care anyway. But to keep it as clean as possible, I'd separate it. And if you have business expenses, you're paying it with business money, then fine. If you like cross back and forth, I've had people do that before. That gets messy, where it's like you're paying your credit card off with business money some months, but then with personal other months, or you're like, oh, well, it was a business expense this month, and now I'm gonna pay it, like do personal, and I'm gonna pay it with my personal. Like that's really hard to keep track of it. So just
Yeah.
keep it separate.
Right. Cool. Thank you.
Yeah.
Yeah. All right, one last chance then. Anyone else have anything before we head out? All right, well, in that case, thanks everyone for attending today's workshop. We'll send a copy of the slides and recording within a few business days to everyone, just in case you did miss anything, as well as I'll include the names of those recommended books. We will be sending a brief survey as well that we would greatly appreciate you filling out from that will be included in the email as well. And one more time, if you didn't know about SCORE, we offer free confidential one-on-one business mentoring, whether you're starting or growing your business. It's as easy as heading to score.org and filling out a short form that you just enter your zip code and it'll take you right to it. I want to thank Jesse here for putting on this great presentation on a very important topic. And I want to thank our sponsor today, the Maine Technology Institute. We greatly appreciate everyone's help today.
Thank you, Jessica.
Thank you, everyone. I appreciate it.
Thanks,
Thank you,
Jasper.
guys. Have a good one.
Bye.